This is gonna be uh, the video about how you could have taken the trades on December 6th. All know with our entry model, what we wait for is either the swept of Asian highs or the swept of Asian lows, and so on. So in this scenario, we swept the Asian lows first. Okay, right at this point, what you're gonna do, drop down to 1 minute time frame. So this is where it is. So this was your Asian session low, right? And what do we wait for after Asian session lows being swept? A market structure shift, a fair value gap or a PPR, and our 5-hour profit target. So in this scenario, do you see the market structure shift in your buys? Pause the video and watch it by yourself. Okay, so this was your rate, and for me personally, I would have a buy at this fair value gap. The reason for that is this was a valid fair value gap. Okay, we swept the low, we had the market structure shift. Now even if you take this wicks or this wick, this was a proper market structure shift. Okay, and after the market structure shift, we broke through the fair value gap candle. So this is where our stop loss is gonna be. So let's take this as -1 hour. Okay, so let me do it. Damn, I actually changed my trading view, so the settings are pretty new. Was this short entry? 1 second, guys. Okay, so this was a long one. This is the, so this is where my buys would be. Okay, and this is where my stop loss. So we took this -1 hour. Okay, after this, what do you see? You have these lows. It was swept again on 1 minute time frame. Okay, and you have a BPR, balanced price range, right? Now if you refine it between the wicks, this is how it would look like. Oh, yeah. So this is another entry that was possible before London Kill Zone. So this is where your stop loss is gonna be below the fair value gap candle, and where should you target? The 5-hour. Now this is your 5-hour. -1 plus 5. Okay, you are in 4% profit. After taking 5-hour, price went back because we have this previous day low, right? Now I guess this was the previous. Okay, and like I have told you about, if you have a previous day low just below the Asian sessions low, so you take your profits at 5-hour and wait for the previous day lows or highs to be swept, and after that you're gonna target to the opposite direction. Now in this scenario, we hit the swept on previous day lows as well. Right, right, bottom. Okay, we swept through the previous day's lows. That we had this entry, okay, with a fair value gap and a market structure shift, right? This is where your second entry would be, third entry, sorry. So this is where your third entry would be, and your target would be the same. The first target, the 5R. Okay, so now you are in 9% profit, even before the London kill zone, right? So after that, this was the last low. It was swept again. Okay, now many of you were confusing between this entry. This was the fair value gap, but with no balanced price range. So I don't know why would anyone took this trade, because your possible market structure shift would be over here, because price went through this low with a momentum, right? And there was no correction to be considered as a break of market structure. So in this scenario, this was only fair value gap with no market structure shift. So this is not our entry. We only take the BPR entry if there's no market structure shift. So this is not valid. Now after that, where do you see another entry? Now this is the market structure shift, right? Either you take it from here or you take it from here, but this one was more valid because this was the last lower high that price made. So at this point, what do you see? This is the point from where your fair value gap started, and this is the point where you see your balanced price range. So as I told you guys, what you would do is to wait for the price to get into the BPR, because BPR have more confluence than fair value gap, right? So if you have taken this trade, your stop loss is gonna be below this. So this is hardly like 1:3 or 4, I guess, I don't know. So but if you took the trade on BPR, now that is where your stop loss is gonna be low in like very low, better than this, right? So this is here your buy entry on the BPR, and this is where your stop loss, right? Now where is your target? The 5R was exactly on somewhere on the highs. Okay, now after this 5R, where is your next target? The London's high, because you see this was created over price created the London session high and then dropped, right? So this was your second target and it was 7.5, and your last target would be this Asian highs. Okay, so this is 10:24. Now 5R -1 and 10. After that, what do you see? The swept of Asian sessions high. After that, what do? We wait for a market structure shift and fair value gap or BPR entry. Now you were confused between this as a market structure shift. This was not a market structure shift. This was the last market structure shift. Okay, so if you have taken this as your fair value gap, you have no market structure shift to trade this, because this was not a BPR. So in this scenario, we would have missed this trade. Let's say you took a loss over here as well. So you are -2 and in 3 wins. After that, we again swept the buy side liquidity. Okay, and price tags into the fair value gap. Now you see this as your market structure shift. Okay, and you have a fair value gap. You have the first tap, you have the second tap. Now it depends on you where do you enter the trade. So this was the short entry. Let's say it took it from here. This is where your stop loss is gonna be, the colors are very dark. So this is your stop loss gonna be, and your target would be, the first target would be the 5 hour, okay, and your next target would be the London sessions low. You see, this guy was selling somewhere over here on BPR to target this London sessions low. You see, price will always clear the equal lows or equal highs, but you have to know when. Okay, this was a clear buying bias. So after clearing all buy side liquidity, we will go to the sell side liquidity. As some if you are somewhere over here, we took the Asian lows, right? We took these lows, we took previous day lows, we again took these lows. So you think price is gonna takes only the sell side liquidity? No, because we have buy side liquidity too, and it's gonna swap that as well. So price went to the buy side liquidity, swept it, and then comes back to the sell side liquidity. So this was your 11-hour trade, okay, with the partials on 5 hour. Now after that, this was your BPR, okay. Now if you have taken this trade on a fair value gap, this was valid, and this or if you are waiting for the balance price range, that was valid too. If I were on the charts at this particular time, I would have missed this trade as well, because I usually trade BPR more than fair value gaps. So this was your trade, and did we took it? No, on this side, I guess the second video or the third video, I don't remember. So on the, I guess, second video, I told you about 830 line, price line. So whenever price is below the 830 line and you have your fair value gaps or order blocks, it is also known as PDRs. So if you have PDRs above the 830 line and price is below the 830 line, like in this scenario, you have this fair value gap and you have this fair value gap, right? Like even if you refine it above this wicks, let me take it, even if you refine it above this wicks, right, you have this fair value gap above the 830 price line, and at this particular time price was trading below this, okay. Now price went back to the fair value gap above the 830 line, okay, and then dropped. Now when price comes at this fair value gap, you will time frames and find your entries. Now this was a very small fair value gap. The French guy, I don't remember his name, Ulrich or I don't remember, he took this trade, okay. Now this was another potential sell entry. Your stop loss is gonna be above the fair value gap candle. Now you would have asked me that there is no market structure shift, but if you look closely, you have VPR once again, and your target would be the same London session lows. That was 14-hour trade. Now if you were to hold this trade, this was around 20. So let's go with our target. Now let's do a recap. First lows, okay, Asian session lows swept, okay. We have our first loss, okay. We have our first win, that was 5 hour. We have the swap of previous day's lows. We have another 5 hour entry, okay. There was no market structure over here, so we missed this fair value. This was a BPR entry, okay, that was 10 hour. So we in total are in 19% because we lost one trade over here. So this was not a valid trade, but still if you count it as a trade, let's go with -1. So you're in 18% profit, and this was the 11, and this was the 14. So this is how easy and it works every day. I don't know why were you confused with your bias, because when I opened my Telegram and I saw that Luca was selling somewhere over here. Bro, why would you sell over here? Because this was your Asian highs, right? This is your bias, bias had liquidity. Now, what should your bias would be? Bias, right? Because you took the Asian session lows, okay, and you are now heading and you took the previous day's lows as well. Now you are heading towards the Asian session highs. Now this is your target would be no matter what. So this is where the price went. After this Asian session swept, we have the now for this entry, where should your target would be? You see, Asian highs swept, Asian lows swept, London highs swept, and what is pending? London lows. So where should your target would be? The London lows, right? And that same Luca guy was, my bad, was taking a buy somewhere over here. Now I don't remember where he was buying. Now, like all of the buy side liquidity is cleared, right? If you see it in intraday picture, all of the buy side liquidity is cleared. Now what is left? The sell side liquidity. Now where, like, why would you buy over here? Your target would be these London lows. So this is what happened, and we bagged like, let's say, 30% in a day. It wasn't a bad day, but yes, it was choppy. But if you like back test it, the this entry model on different pairs, and like I don't remember the if you use the soft forex simulator, there's a crack version too, so you can use it for free. Download it and simulate your trades live, so you can get better with your experience instead of TradingView. And this is it for this video.